After the finance minister announcement on the tax cut for corporates, the market went up sharply, and it went up from around 10,700 levels to what nearly 11,700, and today the market is sideways. So this move has been around 1,000 points in just a couple of days, and I believe this is a trap for the retail investors, and anybody who would get into the market today, or say in the next couple of days or 3 days, the market could go up to even 12,000. 11,800 is a big resistance, but even it can go up to 12,000 to trap innocent investors, especially retail investors, and then there could be a massive fall, and I'll tell you the reasons about the fall later on in this presentation. So operators will make profit. You need to understand that FIIs or DII, FIIs have lost money in this series. So the series is going to end in a couple of days. You could see the market still be at 11,700, 600 levels. Or you could see a sharp fall on the expiry day. We could see that. No one knows. But over the next 1 month or 2 months, the FIIs and DIIs, or the FIIs and the large investors or the operators who have shorted the market at 11,000 levels, 11,200 levels, they would like to make big money in the next series, which would be the October series. So one needs to be cautious over the next 6 months, and I am pretty certain that the Nifty would be lower than 12,000 or 11,700, 800 levels that we have seen today, and we could see levels closer to 10,500 or lower in the next 4 to 5 months. That is my estimate. Hello friends, and welcome to my YouTube channel Simply Stocks. And as you have just seen, I had predicted the fall in the Nifty on the 24th of September, and the fall looked imminent on the 23rd of September when the announcements of the finance minister came in, because post the announcements, the market went up 1,000 points and it was completely overbought. So I'll discuss that, and I hope you have liked that video of mine as well. And where is the market headed now? We'll discuss this in this video. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So about the Nifty fall, I saw it coming, and many people saw it coming, with the way the market reversed from 10,650 levels, and the move from 10,600 to around 11,800 was over 1,000 points. So it looked quite imminent that sooner or later the market will fall on its head, and on its weight the market would fall, maybe from 12,000 or 12,200, making new highs, or it could reverse immediately. And as we saw, the market reversed immediately from 11,800 levels. So what has happened? Basically, it was overbought, heavily overbought, and nothing materialistic had changed for the Indian economy. Yes, there were announcements for corporate rate cuts, but again, I am emphasizing on the fact that there is no impact on the demand. So the demand side of the economy doesn't pick up when you cut corporate taxes, because you don't know whether these corporations would put in or pump in money into initializing demand or propping demand further by reducing prices. They might use that money to give higher dividends, or to just put it into their cash balances or increasing their cash profits, or they could just put into you can say expanding their capacities, and which would take 2-3 quarters to materialize. So nothing immediately changed for the Indian economy, yet the market went up around 10 to 11%, and some of the stocks went up 8-10%, like Reliance Industries, Bajaj Finance, etc., or the big wigs HDFC and so on and so forth. Maruti went up 15%. So that kind of a move doesn't sustain for long, and this is what has happened. Nifty is currently expensive, and Even at say around 11,800 it was expensive. At 11,000 it is expensive. I was about to make a presentation for one of the companies, but I made this presentation just to make you aware that even at 11,200 it seems like Nifty is expensive, because the EPS for FY20 would be around 430 rupees. So even if you take that into consideration, at 27 times earnings, it is quite expensive. So what is going to take place in the next 6 months? We need to analyze this. The corporate earnings will remain subdued. Yes, the earnings would be swelled up because of the rate cut or the tax rate cut in the September quarter. It may come pretty much the same in December, but from March quarter onwards, again the ghost of the low economic fertility in India, and the scenario in India where the economic growth has completely stalled would going to catch up with the numbers, and so the numbers would not be good, and private banks would lead the fall. This is what I think. People are hiding in large cap private banks. They are hiding in large auto companies which have gone up substantially. I don't know why, because the auto industry is in the slump, and it will take at least 1.5 2 years for the auto industry to come back, and probably people will find more solace in defensive stocks, like stocks that export to US and Europe markets, or into companies which are in small or mid cap in other genre or main genre in which they are the market leaders, which could be IT ancillary, telecom ancillary plays, which could be chemicals, small chemical firms, etc. I'm not going to name them because it is a very dangerous trade to take if I name any company at the moment. And in the large cap there could be selling coming, because FY20 will be a washout, so there would not be any increase in numbers in FY20. Another thing is, even if the FPI surcharge has been removed and there are very less taxation on equities for foreign investors or large investors, for them to come back into the Indian market, it is going to take time. It is going to take around 3 to 5 quarters for that to change, and for them to come back into the market and buy big time. And unless there is heavy buying on the FII fronts, I don't see the market going up substantially. In fact, I see heavy selling coming in from FIIs, because they have found better, you can say, prices to sell at rather than buy at. And as far as GDP growth is concerned, and we just saw that the RBI has reduced the GDP forecast from 6.9% all the way to 6.1%. I believe that this is for FY21, and I believe for FY21 the GDP growth would be more or less same, around 5 to 5.3%, 5.4%, and it is not going to help the large stocks. It is going to help the small stocks which are debt free, which are into producing cash rich businesses, but for large companies more than 1 lakh crore or nearly that, or going to 2 lakh 4 lakh crore company, market cap company, a 5 or 5.5% GDP growth will not help them make 20-25% profit year on year. Their profitability would be hurt, and hence the move on the Nifty will not be substantial, and we could see further fall in the Nifty. So what could be the strategy from your behalf? You should buy good mid and small cap companies on massive falls in the market. And as you have seen even today, that the Nifty has fallen big time, but the small and mid cap has not fallen that much. So you should be looking at companies where value is. So just analyze some of the companies with respect to some of the videos that I have put forward to how to analyze value of a company, how to make decisions for buying multi-baggers and all. You can have that video. The link is right now showing in the information section on the right hand side, so you can watch that video or analyze companies in and out and find out the intrinsic value of the company. And that is the most difficult part. And once you do that, go ahead and buy those companies and sit on it. Avoid debt and pledged companies, companies with high debt or companies with pledge. We saw what happened with Yes Bank. And the target of the Nifty would be at least 10,500 in my regard in the next 6 months. It could go to 10,000 or below that. So avoid dabbling into Nifty stocks and look for good mid and small cap companies, and have a long term view of 5 to 6 years. And when your target approaches in the next 2 3 years, exit those companies. So you need to throw away trash, those companies that you have which have high debt or high pledged holdings and are not making money for you. You need to get away from them. So this was a video on the Nifty at the moment and where it is headed in the next 6 months. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.